Okay, Fibonacci retracements. They're levels of measured support and resistance based on Fibonacci ratios. And I think pretty much most of us are probably familiar with the Fibonacci retracements. If you're not, we're not going to get into the whole history of the Fibonacci sequence here. What you can do is you can Google Fibonacci and you can get a whole history of how these mathematical sequence applies to nature, human nature. You can see it in all kinds of places in science and everything else. Okay, so anyway, we're going to talk about here the very specific Fibonacci levels we're going to use and how we're going to use Fibonacci retracements. All right, so the Fibonacci retracements are based on the Fibonacci sequence. They're basically ratios from the Fibonacci sequence. We will use Fibonacci retracements to measure corrective pullbacks to isolate key trading zones. We're going to use the 38.2%, the 48.6%. Often, by many traders, that is listed as the 50%, but 50% is not an actual Fibonacci ratio. 61.8% and the 78.6%. Okay, so those are the four main retracement levels we're going to use. All right, we don't use a 23.6. I don't like to use that because I won't even consider a cycle complete unless it's retraced 38.2%. Plus, we'll get into reward to risk ratio and things like that, and I just want to see a deeper pullback than 23.6. The main zone we're going to use to look for trade entries is the 48.6 to 61.8, and that's why I have them in green here. All right, these provide stronger levels of support and resistance when combined with other support and resistance reasons such as price, trend lines, or pivot points, even other Fibonacci levels. If we measure the different swings with different high points and different low points, and we can get the Fibonacci numbers to line up, we call those overlapping fibs, and those could give us a bit more support and resistance as well and be more powerful. Obviously, these levels also have more significance on the higher degree time frames. Now, just like any support and resistance, we look at these levels as support and resistance zones. Okay, so just because price spikes through the 62% a bit doesn't mean that that level is broken. So let's go ahead and look at our charts and look at some of the ways that we're going to use Fibonacci retracements. And then we'll get even more detailed later on when we actually get into the application part of the course. Okay, so I'm just going to walk through this chart and through this uptrend here and just kind of show you. First of all, we had this divergence and then we had an initial rally. Now, after this rally, let's measure this particular pullback. This was a retracement. If we use our Fibonacci retracements on this, you'll see that we retraced right there, right to the 62% Fibonacci retracement. Price continued to rally. Okay, let's go to another, the next swing. We'll just go to the very next swing right here. All right, so we'll measure this swing from the low to the high. I'm just going to pull this over. You can see we retraced to the 48.6% level and then rallied to a new high. All right, let's continue to go here. We're going to now measure this cycle right here. We went from the low to the high, we retraced to the 79%, then rallied to a new high. Okay, so you see how the fib levels work for pullbacks. Now, we're going to take this entire swing, look at this corrective setback, and you can see we retraced just through the 62% Fibonacci retracement level. We had a bit of a reaction, a pullback. Price consolidated here for a moment and then took back off to the upside, eventually moving to a new high. Now I want to show something else here. Let's look at this from the larger degree. Okay, so now we're going to look at this three-wave completed cycle. Now we have this pullback X wave. Let's go ahead and measure that. Okay, so now we're measuring from our low, and here's our high, and the market pulled right back, fell just short actually here of the 62% Fibonacci retracement right here. Okay, so we declined right into that, and this is the zone we watch. You'll see on the charts what we'll look for in the live service here is we'll mark this off just like this with a buy zone if we're looking at a potential buy in that area. We'll mark off the 50 to 62% zone for a potential buy. Okay, so a lot of times we'll have this sitting just like this for a pullback, and that's where we're looking to actually buy the market. And actually when the market came down here, what do we see? Our good old best friend, price moving lower, MACD swinging higher, we have divergence. Okay, leading into this down cycle, price moving higher, MACD swinging lower, we have divergence. That was the hourly chart. Let's go ahead and look at the monthly chart here. Here we have a decline, then we have a setback. Let's go ahead and measure that pullback, and you can see we traded through the 62%, but the main price action here is right around that 62%. This is what I'm talking about, a trading zone. You want to wait for a trading setup to develop. So price rallied here. We had a big wick on this candle, and you can see we had a bearish candle, another retest of this level, and then a strong bearish candle back to the downside, signaling the end of that upcycle. Okay, 62% Fibonacci retracement area, which led into an equal legs move, and we'll talk more about this when we get into our extensions. But this led into an equal legs move right here, where this leg was equal, 100% equal with this initial decline. Like I said earlier, folks, we're going to show you so many of these patterns. We're going to show you so many equal legs moves. We're going to show you so many of these Fibonacci retracement levels that if you don't believe that the markets are patterned after this course, you clearly didn't come here with an objective mindset. All right, let's look at this retracement. So we're going to look at this next decline. Okay, where did the market retrace to? 62% fib. Okay, before seeing a reaction. Now price even pulled up again, and where did we test? 79%. So we went into a more complex corrective cycle here. If I pull the fibs over, came right to test that 79% fib, and then down we went. Down we went to new lows. Even this most recent cycle here, this current cycle, what do we have happening? Price moving lower, MACD swinging higher, right here, swinging higher. Oops. You just get it out of the way of that little tool there, but MACD swinging higher here. We've rallied through this high point. Okay, we're going to cover this a little bit more later. Okay, rallied through that high point. And let's look at the pullback here. Let's measure this. Let's see where we pulled back. 62% Fibonacci retracement. Spiked through it a bit. Rallied back up, closed above it. Tested it again here. MACD back to the zero line. Very interesting looking scenario right here. This is a qualified divergence setup on the monthly chart. Okay, we'll get into this setup a little bit later. But this is the example of our very objective MACD divergence setup that we'll use. This just happens to be on a monthly time frame. Okay, but again, we're just showing Fibonacci retracements right now. I have a habit of pointing out divergence every time I see it. I just see it everywhere. I've been doing this for so long, I see divergence in my sleep sometimes, I think. So anyway, that basically that is Fibonacci retracements. What we'll use, you'll see very specifically with the setups that we're going to show later, that we will use the 50 to 62% zone a lot to watch for trading setups, and that's important. Watch for trading setups, especially when we're looking at them on the higher degree time frames. We're going to mark off this zone, and then when we see price come and have candles like this, okay, big wicks on them, big reversal, divergence in the smaller degree time frame. I don't know if there is. Let's actually just take a look. Okay, there absolutely was. There was divergence here. Remember, that was a monthly chart we were looking at, so we're talking about back over here, and then look at the divergence here. Okay, at these lows here, we have price moving lower, MACD swinging higher, failure, bullish candle, retracement, and then up we went. And this is what we talked about. When you isolate these levels on the higher time frame charts, that was a 62% Fibonacci retracement level on a monthly chart. All right, then we had a divergence in the smaller degree time frame. All right, so let's look at what that led to so far. I mean, so far we're talking about over 745 pips. 745 pips, understanding that we are looking at a strong or potential strong level of support on the monthly chart. Drilling down to the 4-hour chart here and seeing that divergence at that fib level. Okay, so Fibonacci retracements. Next, let's talk about extensions.